All right, so I want to take a look at taxes and tax brackets. Okay, now this is something that a lot of adults do not understand how taxes work. Okay, and you can tell by the way that they talk about them that they don't understand how they work. So that's why I think it's really important to take a look at this and make sure you understand what exactly is going on here. Okay, so first off, just some vocab. So your gross income is just the amount of money that you made, just the total amount of money that came in, not dealing with any kind of taxes or anything, just strictly what was the total amount, okay? From your gross income, there is then something called an adjusted gross income, okay, where you make these things called adjustments on your income, and the government decides what these things are. But some examples, student loans count as adjustments sometimes, okay? Interest that you pay on certain things, if you're paying alimony, that can count as an adjustment. Sometimes moving expenses counts as an adjustment. Okay, and it just sort of depends on what your situation is and whether these things count or not. Okay, but basically you have these adjustments and they basically say, okay, well, you actually made this much, but we're going to cut off these adjustments and say this is your adjusted gross income. Okay, once you get past that, then there's something else called a deduction. Okay, so deductions are something else that come off of your adjusted gross income to give you your actual taxable income. Okay, so some examples of this would be like your state taxes. Okay, so any money that you pay into state taxes, which New Hampshire doesn't have state taxes, but like if you lived in Mass, if you pay some of your money to state taxes, they don't charge you like full government taxes on anything that you paid for state taxes. Okay, charities, if you make donations of money or goods, if you have a mortgage, sometimes that will count as a deduction or part of it. And then again, some other kinds of interest will count as deductions. Okay, so when you file your taxes, you go through, and honestly, filing your taxes is not that big of a deal for most people. Okay, most people, you have one, maybe two jobs that you're having income from, and you're going to go onto something like taxusa.com or TurboTax, and you're just going to be walked through a bunch of different questions that you're going to answer, and at the end, you'll file your taxes. Okay, if you're dealing with something where you have like rental properties or you own your own business or there's weird things going on like that, that's a more complicated situation, and that's when filing taxes can be a little bit trickier. But for most people, it's honestly not a big deal. I'm not going to go over how you fill in tax forms because it's literally just answering questions that a program will ask you. It's very, very simple and straightforward, again, for most people. Not always. It will be complicated for some people, but for most people, it's really not bad, okay? So don't stress too much about this, okay? Now, tax brackets. This is the big thing I want to talk about. Okay, so there's different ways that you can file your taxes. You can file as a single person. You can file as a married couple filing together, or as a married couple, you can file separately. And then there's also this head of household thing, which to be honest, I don't really know what that is, but it's apparently another thing that you can file. I just file as single. So we're going to just stick with filing singly for right now because to the best of my knowledge, none of you are married. So looking at just these tax rates and tax brackets. Okay, so when you look at these, the first thing that you're probably going to notice is like, wow, that's a big percentage, right? Like, okay, the government taking 10% of my income, sure, but like 32% of my income, 37% of my income, that's a lot of money, okay? That's not exactly how they work, all right? So before we get into how they actually do work, I want to talk about a really common situation, okay, where you have something like Bob down here. Bob is single. He currently makes $38,000. So $38,000, that means that he's in the 12% tax bracket, okay? His employer offers him not a $40,000 raise, a raise to $40,000. So there we go. So he's going to be making $40,000 instead. So it's a $2,000 raise. Okay, so if he does that, that means that he's moving from this tax bracket that he's currently in down into this tax bracket, which has a significantly different tax rate. Okay, so his friend tells him that he should turn down the raise because the higher taxes mean he's going to end up with less money in his pocket. Okay, so let's talk about what the logic is behind this claim. Okay, so right now, Bob is making $38,000. So here's what the logic behind this claim is. They're saying, okay, well, $38,000, you're in a 12% income rate tax bracket. So that means you're paying this much money on taxes. So when you take away that money you spent on taxes from how much you actually earn, this is what you're going to actually walk away with in your pocket. If he takes the raise up to the $40,000, right, then he's going to be in a 22% tax bracket, which means he's going to pay this much money in taxes. And his actual takeaway at the end of the day would be this much. And when you look at these two numbers, you look at it and you say, well, he was actually taking home more money before he took the raise. Once he takes the raise, now he's taking home less money because look at the difference in how much the taxes are. So what Marta's thinking is she's doing the math out like this, and she's saying, no, don't take the raise. If you take the raise, you're going to be actually getting more like $2,000 less. Okay? Now, this is something that you will actually hear people say. People will actually make this claim that in a situation like this, where you'd be switching from one tax bracket to the other, that you're better off not taking the raise. Okay? That is 100% not true. Okay? If you remember anything from this video, remember that you should always take the raise. Okay? So always take the raise. Okay? Sorry, it's incredibly difficult sometimes to write and talk at the same time. Always take your raise, okay? Because the math that we just did is totally faulty. That is not how tax brackets work, okay? So we're gonna take a look now at this situation, and I wanna walk through it and actually show what would actually happen in this situation. Okay, so what I have here, this is just kind of like a number line that has those same numbers from those tax brackets. So you can see on here that if you make from 0 to the 9,700, you pay 10%. There's the next bracket of 12%. Here's the 22%. Okay, so it's the same thing. I just wrote it out as kind of like a number line kind of thing. And then these pink numbers here is just telling you what's the range here. So what's the difference between these two numbers? What's the difference between these two numbers? What's the difference between those two numbers? Okay, so that's what those pink numbers are. So let's take a look at this actual situation that we're talking about here with our good friend Bob. Okay, so right now he is making $3,800 or $38,000. So that's going to land him in this tax bracket here. Okay, now here's how this math actually works. You don't take the $38,000 and you multiply it by the 12%. Okay, how tax brackets work is that any amount of money that you make that's from 0 to $9,700, you're going to take 10% of that interest. Okay, so Bob, the first $9,700 that he makes, he's going to pay 10% interest on, which is $970. Not interest, taxes. He's paying 10% taxes on. Okay, so that's where we're at so far. Now, Bob made more money than that, right? He's making $3,800. So that $3,800 minus that first tax bracket, $38,000, there we go. I needed an extra zero. This is how much money he's making above this first tax bracket. So for this first tax bracket, it goes up to $9,700. He's making an extra $28,000 on top of that. Okay, so when we look at this 12% interest rate, he's not paying 12% of the whole $38,000. He's only paying 12% of this difference. So he's going to take this $28,300, and that is what he's paying 12% of. Okay, so when I multiply that by 12%, that means that he's going to pay $3,396 on taxes in that bracket. So the first $9,700 that he made, he only pays 10% on. But then the next $28,000, he's going to pay 12% on. Okay, so this is how much he's going to pay total in taxes. So the total amount of taxes that he's going to pay is that $3,396 plus the $970, okay, which works out to $4,366 in taxes. So that is what he's making in taxes on this $38,000. And again, that's very different, right? From Marta's math, she said, well, I would take this and multiply it by 12% and you'd be paying this much in taxes, right? That is not how much money you pay in taxes, okay? So that's how much money that he's making right now. So this is if we're looking at a salary of 38K. Okay, so let's talk about what's going to happen when he takes this raise, okay? Because he's going to take the raise because you always take the raise, right? That's your one takeaway. Okay, so he gets this raise, and now his salary is going to be $40,000. Okay, so starting down at the bottom again, the first $9,700, he's still just paying 10% interest on. That's still $970. Okay, now anything that he makes up to this $39,000, so anything he makes between these two numbers, that's what gets 12% of his tax rate here. Okay, so how do we figure out how much that is? Well, it's $40,000, right? And I'm subtracting out the tax brackets from here that we've already taxed on, right? And then I'm just taking off that little bit of extra that gets you up to $40,000. Okay, so it works out that he's going to have to pay on 29775. That is the amount that he's going to have to pay 12% interest on. That's what this pink number is. It's just the distance between these two. Okay, so he went through this whole tax bracket, and all the money in this tax bracket he paid 10% on. He went through this whole tax bracket, he's paying 12% on that. Okay, and when I calculate that out, that works out to $3,573. Okay, and now the extra money on top of that, so the extra money that actually bumps him from this tax bracket into this tax bracket, he's making a little bit more than $39,000. Okay, so he's making an extra $525 in this 22% range. So that is what he's going to pay 22% taxes on. Okay, so that's going to calculate out to $115.50. Okay, so this is how the taxes are broken down. So the total amount of tax that he's paying that $1,115.50 plus the $3,573 plus the $970. Okay, and that works out to a total of $4,658.50. Okay, so when you compare these two numbers, is he paying more taxes with his raise? Yeah, he is. He is paying more taxes. But look at what the difference between these two is. Okay, the difference between those two numbers, if I actually go ahead and subtract them to see how much more is he making, right? If I subtract those two numbers, he's only paying less than $300 extra to the government. So he got a $2,000 raise, and the only increase in taxes is not even $300, which means he's actually walking home with about $1,700 extra dollars in his pocket. So Marta's math of you're going to be ending up paying more money in taxes if you take the raise is totally not true. You are going to pay more in taxes, but not so much that it's going to impact your entire salary and you're going to walk away with less money in your pocket. Okay, so always take the raise. Right now, here's the other thing that I want to talk about really quick. It's something called an effective tax rate. Now, when we look at this table here and it gives you these percentages, it's kind of confusing because most people think like Marta does. They think that when I look at this number, if I make $40,000, that I have to pay 22% of my income. Okay, you don't actually pay 22% of your income. That's not how it works. Okay, so I want to take a look really quick at something called an effective tax rate. Okay, so your effective tax rate is basically just saying, okay, well, based on how much money you actually end up giving to the government, comparing that to what your salary is, what percent of that is it actually working out to? Well, 4,366 divided by that $38,000, that's only about 11.5%. So the effective tax rate without the raise is about 11.5%. Okay, the effective tax rate with the raise, well, we paid $4658.50 out of the $40,000 that was his new salary. That is about 11.6%. So when you look at what the difference is, even though that raise gets you up into a new tax bracket, and there's a pretty steep difference between the tax rates in these two tax brackets, the actual percent of your income that goes to the government really doesn't change that much. It's pretty darn close. We're only adding 0.1%. Okay? So when you're looking at tax brackets, it's just important that you know what in general is going on here and what is being talked about. Are you going to have to actually calculate this to do your taxes? No, you're going to go on Free Tax USA or TurboTax, and they're going to do all this stuff for you, and you're not going to have to worry about it. But when you have a politician who's on talking about being the next president and they start talking about how they want to change the tax rates, it's important that you understand that this is how taxes work. Because as you're changing the different tax percentages here, it doesn't make as big of a difference here as most people think it does. Okay, so this is just a being a good consumer and understanding how your government works kind of setup. Okay, now obviously, if you're filing different statuses, these brackets are a little bit different, but the whole process is the same. Even though here this number is a little bit different, okay, you still do the same thing. You only pay 10% on the first $1,900, then you pay 12% on any money that's between these two numbers, and so on. Okay, so that is how taxes work. And again, the short answer is that if anybody ever tells you don't take the raise because it'll put you into next tax bracket, always take the raise.